Sapphire Partners is sponsoring once again. And once again, I'll mention that Sapphire is the top recruiting firm in Southern California. I've used Sapphire to hire two of my favorite Southern California people. Sapphire has been in business in Southern California since 2006. They've done over 1,000 searches, so you know that they know everyone. Check them out at sapphirepartners.com or send me a note on LinkedIn. Do that regardless.
Hello and welcome to the LA Venture Podcast. We're David Waxman and Minnie Ingersoll, partners and investors at TenOneTen.
If you think that the $30 trillion energy sector is important, then you're going to like today's show. I'm Zooming with Ernst and Vaughn from Blue Bear Capital. Blue Bear invests in technology for the energy sector, but they're looking at the full energy supply chain, so it's a pretty broad scope of investments as I understand it. Not a lot in your guys' portfolio that's really like on the consumer side of energy, but you guys can tell me about that. Ernst and Vaughn and I are all here in LA, but we're on Zoom for this one. So thank you both for Zooming with me.
Thanks for having us.
Yeah, thanks for having us. I think you were literally our last in-person meeting in the first or second week of March before we all went into lockdown. I remember we did the elbow bump in your office.
Yeah, I should have brought my microphones had I known. Vaughn, so why don't I start with you and put you on the spot and just give me some of the basics of Blue Bear, what you guys invest in, what sort of traction, what size checks, all that stuff.
Yeah, absolutely. So Blue Bear Capital focuses on investing in data-driven technologies that optimize, enable, or protect energy assets and the energy supply chain. Our range of check size is about 1 to 4 million, usually zeroing in around 2.5 on average for our first check. And we intend to follow on. We save about 2 to 1 in terms of capital for reserves and our versus our initial investment.
That's great. And did I sort of tried to characterize it as being more this energy supply chain rather than consumer? Do you have certain, do you focus on renewables or do you have certain themes within that?
Yes, we do. So we really focus on the industrial activities and the supply chain complexity that are required to get energy from production all the way through to market. We're less likely to invest in, let's say, a smart home thermostat or a scooter because that's last mile transportation. We're more interested in software like operational AI or industrial communications and connectivity that's deployed in a large scale wind farm, solar park, refinery, transportation network, grid infrastructure. So most of that trillions of dollars a year spent in the energy industry is actually in those complex industrial operations. And that's where we found the least penetration of software. So the greatest investment need and opportunity.
And from what you just said, you used wind turbines, solar farms. Do you have a renewables focus or is it more traditional oil and gas?
So I hesitate to say that we don't touch oil and gas because actually a lot of the world's largest oil and gas operators are aggressively pivoting towards building wind and solar and grid infrastructure. So sometimes our portfolio companies' customers may be a Chevron or a BP or a Shell, but actually they're redirecting a lot of that engineering, procurement, and construction talent towards more sustainable resources. And that's really where the bulk of our Fund 1 exposure and investment is, and also what we see the outlook in for Fund 2.
Interesting. So did you say like an Exxon or someone, they're putting resources towards renewables?
They have historically been a bit of an exception, but even they have now deployed solar and I think even now some wind to power some of the electricity needs on their oil and gas fields. And they've been also an early and aggressive investor in things like biofuels, algae. So yeah, there's very few players left in the traditional energy industry who aren't at least hedging, if not more aggressively pushing renewable sources.
I think I need to go take like a selfie by a solar panel on an oil field. Somehow that's too good. So Ernst, sticking with you for a second, because you started Blue Bear and have deep background in this sector. Maybe start us off by your background.
Sure. So the first energy technology investment project I was involved in was actually a hydrogen fuel cell business. And since then, I spent a few years in energy M&A and then ended up joining a private equity firm that specializes exclusively in energy. So a company that has $40 billion of assets under management and invested in over 150 energy companies. And that's really where I developed the original starting point of what's now Blue Bear's network of peers of ours. So a lot of people from places like Blackstone, KKR, Apollo, TPG, a lot of the private equity firms that quietly direct about 40% of all energy spending in the US. So you may think of Chevron and Exxon and BP, but actually a lot of those private equity-backed companies are doing a very high proportion of wind, solar, and traditional energy development. And we found that they did not have good access to Silicon Valley and to digital tech in general. So that was a big catalyst for making the transition and partnering up with Vaughn.
Okay, so tell me more about that. So 40% of the energy spend is directed by or sort of in these companies, done by these companies that are owned by PE firms. Yeah. Is that what you're saying? So if I'm a portfolio company of yours and I want to get a contract with one of these, do I go through the PE firm or do I go to the operating company?
Yeah, it's a good question. It's really more to the operating company. And we'll talk in a minute about our close engagement with the founders in Blue Bear's portfolio. But typically, if you're the, let's say, industrial IoT connectivity provider or the predictive maintenance AI, in air quotes, provider, you're trying to get the actual operating company to use your software or use your technology solution. So you probably have a relationship with the asset manager, the head of operations, the head of field services, the head of IT, and they may be interested, but they don't necessarily have board approval. A lot of these boards have been pretty cynical about Silicon Valley technologies or think that AI is just buzzwords, not a real thing. And that's one area where Blue Bear tends to directly support the sales process and the customer landing and expanding process. We provide air cover by having the personal relationships at that board and ownership level to reinforce what the field and the asset level people already see as valuable, but may not have the authority or the budget to deploy.
Air cover as a service.
Air cover as a service. That's funny. Right, because you're leveraging those PE fund relationships.
Among others, yeah. We also have pretty close links with a lot of the corporates themselves, but the PE part is usually the most opaque and inaccessible to tech company founders.
Yes, I find the whole PE industry fairly opaque. And so at Riverstone, tell me a little bit about Riverstone, just in terms of what were you guys doing with your investing?
The firm would basically find a management team with some exceptional insight and provide a line of capital to build and grow a business. So it's much more of a venture capital type mindset than more the LBO focused and financial engineering focused firms out there. In this case, the main difference is check size. Those lines of equity, instead of 5 or 10 million, would be 200 or 500 million because the capital is going into building expensive infrastructure, whether it's wind farms or oil and gas facilities.
But I sort of thought in PE that the idea was not to flip it, but not to own it either, not to be the majority owner. And so I'm surprised that 40% of the energy industry is controlled by PE if it's meant to be sort of a more short-term relationship.
Sure. A lot of the development spending happens earlier in the cycle. So if you're building a commissioning or preparing to build, let's say, a utility scale solar plant, you're securing the land, you're organizing the engineering, the procurement, the construction, the commissioning, the grid interconnection. So there's just a lot of relatively complex industrial activity you have to take care of, and that's fairly expensive. And that's funded through a combination of debt and equity, like many things. And then once the business has gone into operations, the private equity investors may have sold out or stepped off the board, but they still maintain close relationships with the management team and the company's activity. So they're easy for us to get connected to through that network.
Okay. I mean, it's all very interesting, but I'll go back to Blue Bear and what you guys are doing here. Do you do this because do you have like an environmental focus? And what do you see kind of today in the energy sector, maybe as it relates to the growth of renewables?
Yeah, I undoubtedly joined Blue Bear to be, to have a front row seat and at least contribute, a small way to the energy transition, which I think is, a defining event of our lifetime. The way that there are, I guess, two trends that we feel very strongly about and I think are essentially irrefutable. And that's one, the increasing digitization of industry writ large, more data, more digital, more software, et cetera. And the shift from sort of conventional fossil fuels to a more renewable and distributed energy future. And even if, there has been exposure to what's seen as a more typical hydrocarbon-based generation process, the investments that we're making are specifically made to reduce the environmental impact that those businesses might be providing.
Where are we in that transition? Just broad strokes.
Globally, which is similar to in the US, still between 80 to 85% of energy needs are coming from conventional sources. That's much lower in certain regions. There was a day recently when I believe California powered more than 70% of the grid through renewables. So when demand is a little bit lower and baseline production from sunny days and good infrastructure is relatively higher, you can get a really high percentage penetration from renewables. And then actually what starts to become challenging is the market structure and some of the infrastructure. So we see the bottlenecks and challenges evolving, and each one of those is an investment opportunity set of its own.
Exactly. The curtailment and storage are probably next up in terms of major secular shifts, with renewables becoming more economical to produce. Obviously, at times they can even exceed capacity. And with excess capacity, you're kind of stuck in a position where you need to figure out a way to actually store. So storage, I think, is going to be one of the next emerging game changers.
There's a little irony because a lot of the oil and gas community has pointed at storage as being the Achilles heel of renewables, right? You can only really produce wind and solar when the sun is shining or the wind is blowing. And the irony is that we're recording this here on a day where the price of oil dropped at one point to nearly negative $30. And that is because, if you haven't been checking out the wires today, there is such a glut of production coming online compared to the demand as coronavirus and long-term other things slow down demand for oil, that there literally are not enough places to store the oil coming out of the wellhead. And so storage is suddenly being much better addressed by technology innovations over the last couple of decades in wind and solar development. And the basic technologies like tanks and depleted reservoirs are suddenly not sufficient for an industry that's been operating for 100 years.
Right. I mean, I think of storage. When you say storage, I'm thinking of battery technology for renewables. But I mean, I'm super interested in your perspective on what's going on today in the world in terms of the Saudis and the Russians were, I don't know, having a standoff and have been shipping their oil over towards us. I haven't really been following it, but
we like to call it BroPEC. So there's this era of complete free for all, and then OPEC was formed, and then more recently OPEC Plus, where the Russians were more engaged. But then over the last about 18 months, there's been this series of basically global energy supply
catastrophes,
global energy supply policy by tweet, where MBS and Putin and the U.S. president basically make promises to each other and organize how they're going to communicate that. And that's fine. That's probably a necessary component of directing such strategically important industries. But you just cannot enforce tens of thousands of independent producers in the U.S. and dozens of countries that are fundamentally having to meet budget demands and fund things like healthcare and education through energy sales. So to not expect there to be rampant, let's say, non-compliance with OPEC policies, even among OPEC members, let alone among a bunch of drillers in West Texas, it seems very naive. So we're not surprised that there's a bit of disarray. Of course, nobody expected the economic shutdown the coronavirus has led to.
The reason that the contracts fell through the floor today is because they expire today. So, usually folks are trading these contracts and it's going from, holder to holder to holder. But when the contract expires, there's actually delivery required. So today, whoever's holding those contracts is actually going to have to receive delivery of 1,000 barrels of oil for every contract that they hold.
How much did consumption drop off from COVID?
About 20 million barrels, which is roughly 20%. And OPEC has been able, or OPEC plus, or we call it BroPEC again, because it's really three individuals who've got an outsized effect right now. They've been able to cut something like 10%, or at least claim to agree to cut something like 10%. If you really imagine a lot of these producers, whether they're governments or private companies, taking one on the chin for the rest of the world, we'll see what actually comes through.
Wow. And so bringing this back to Blue Bear a little bit, which is, where are you guys, where do you see the tech applied to this situation, or, broadly to the market?
Well, part of the origin of this strategy was, in our energy private equity days, we would be sitting at board meetings of major wind developers or offshore oil and gas producers, and you would actually have a 30-foot blade fall off a turbine or an offshore power supply get cut off. And nobody would know exactly why or how long it would take to fix it or where to get replacement parts in a very timely manner. And these are sophisticated operators, so they know it as well as anybody in the industry can possibly know it. That just wasn't a very high standard. At the meantime, you'd come out of those meetings and you'd order your Uber and it would pick you up on demand. You'd be able to check the temperature in your bedroom from a smartphone app. You'd be able to order whatever you want for the next day's or week's trip on Amazon. So really, the bulk of our investment is in taking proven technology concepts enabled by software engineering and data science and deploying them in a very tailored, thoughtful way to these large critical use cases.
There's something that's called the great career change going on right now, where basically all of the management class is approaching retirement age, and there is basically an entire generation left the energy industry during the crash of the oil crash in the 80s. So there's this massive generational gap between management of 2 to 5 years ago and what management will look like tomorrow. So one, there's a massive opportunity for this industry to digitize, and we have digital natives sort of running the show. But two, there's a significant amount of knowledge transfer that maybe even 3 to 5 years ago would have been lost. But sort of enabling some of these, I guess, quote unquote, frontier technologies that enable that knowledge transfer, whether it's immersive computing, whether it's voice, whether it's AI, ML, and NLP, but sort of gathering, processing, validating, communicating, and transferring that knowledge from the older generation to the newer generation is something that's really exciting. It's something that try and take advantage of in terms of investment opportunities.
What does that mean? I mean, I don't think you mean, digital photo albums or something. Like, what does that mean to codify that knowledge transfer?
Sure. So one example is a deal that we're just actually closing on today. In the middle of the coronavirus shutdown, we're still seeing, both from our team and some of our favorite co-investors, great continued engagement in the VC funding landscape. But this is a business that basically deploys a voice interface to allow workers to go through any kind of maintenance and operations activities without having to constantly either pick out a tablet or a phone or walk over to a shared workstation and type things in. So it's an example where we're using existent technologies to capture industrial operations data and not just do that task faster. It's like 80% faster task completion times that this company Datch has registered. But in the course of processing all of that information through a voice layer, you're actually extracting a lot of the knowledge, the context awareness, and the background knowledge that these teams have by taking in exactly what they're thinking while they're doing something, as opposed to what they want to write down in 10 seconds at the end of a busy day.
Got it. And so in that example, or in a lot of these examples, you guys said at the beginning that you're looking for someone who has at least one, I think you said, industrial contract.
Yeah. So typically we engage once a business has, well, we can engage much earlier, but we might invest once a business has demonstrated six-figure revenue run rate potential, or actual revenue run rate. And that's because we like to see a scale of enterprise deployment that we can multiply through our network. So if you've sold your enterprise software to a couple of independent wind, solar, or related service companies, we can take those case studies and present them to dozens, or in some cases over 100 operators that are quietly owned by that private equity universe again.
But I'm going to turn this over to Vaughn, which is Vaughn. Before this, well, you should give me the quick version of your background as well. But before this, you were doing frontier tech investing, and so I am curious about your perspective on energy investing now.
Yeah, for sure. So yeah, prior to Blue Bear, I ran, or I guess technically still run, a solo general partnership called Autochrome Ventures. It is basically pre-seed through Series A fund, where the thesis that I developed was, I called it Applied Frontier. So the industrial enterprise application of frontier technologies. That fund, I guess, invests in about 25 companies, everything from immersive computing to human-computer interaction to space tech, synthetic biology, and AI/ML narrowly applied. I'd say the most frontier aspects of energy are a little bit more binary nowadays. These are things that usually material science based, or battery chemistry, those sorts of deals that are very far out in terms of understanding whether or not they can sort of hit the ground running and promise a return. I think they're extremely attractive from a technological standpoint, and I understand why, especially a lot of friends of mine that still invest purely through the lens of sort of deep tech, try and back those companies. There's just going to be a significant attrition rate around portfolio constructed in that capacity. What I'm seeing now is, again, some of the technologies that 3 to 5 years ago might have been seen as particularly cutting edge, AR, for example, having just extremely intuitive and impactful applications within the industrial space. I mean, everybody's seen the old McKinsey or Gartner projection of the size of the VR market, and everybody's going to be sitting in their houses with Oculi on. But it turns out that the most I guess initial and effective and again impactful application is AR screens for industrial workers to help them with things like compliance management and workflow management.
Yeah, and it might be helpful to run through a few quick case studies. I can probably do it in under a minute. So
great.
Just giving you a quick tour. Our first investment was in a company called MineralSoft. It was really just an ERP system for mineral rights and royalties owners. So a lot of the farmers and ranchers who have energy asset passive income. That was exited pretty quickly and successfully to a strategic. A business called Amidian that does remote monitoring and diagnostics for rooftop solar. They have over 200,000 rooftop solar assets that they manage with remote monitoring software, extremely efficient and timely. Mission Secure provides industrial cybersecurity, making sure your tank farms and gas plants and shipping assets aren't being hacked into or at the extreme blown up. Shoreline provides simulation and optimization software for offshore wind development and operations and management. Raptor Maps is really digitizing the entire process of building and operating utility scale solar farms. FreeWire does electric vehicle infrastructure software and components. Everactive is battery-free industrial sensor technology, taking just ambient lighting and tiny temperature differentials to power IoT sensors. Copper manages demand data for power, electricity and water, gas, electricity, and water. Transect is digitizing and automating the ability to run all kinds of environmental impact assessments. If you're trying to build a transmission line or any kind of energy asset, and you have to get permits, identify endangered species, cultural heritage sites, right-of-ways, all that can be done much more automatically and digitally through their analytics and cloud software. So each of these are technologies that you can map to some other business use case, but they just have not been well developed for managing large, complex, again, often cases, multi-billion-dollar assets in the energy supply chain.
So staying on Bluebear, you guys are both in LA. Hooray, LA. How many people total are on the team? Because you have some presence in other cities.
Yeah, I can run through the team overview briefly, and that's, of course, our greatest asset, our greatest strength. So 3 of us are full-time in LA, Vaughn, myself, and our GC and COO, Hank, who's a former Latham & Watkins attorney. Then we have Carolyn Funk, who's in the Bay Area. She's a PhD who supported the German Energy Agency and then worked in the venture partnership and development team at Siemens for several years before becoming COO of 2 different energy storage companies and helping them get from seed to Series A. We also have our CTO, who's a computer science PhD and really our expert on software risk assessment and software development acceleration, Rob McGinnis. And very importantly, a couple of our most effective and supportive advisors and investors, people like Tim Kopra, who's a former NASA astronaut and longtime military veteran who's based in Houston. He was really hands-on in Fund 1 and as a leader in kind of our team development in Fund 2. And Lord Brown, the former chairman and CEO of BP, was also on the boards of Intel and Goldman Sachs and many other firms. Again, tremendous perspective and network in the energy industry, and someone I worked for directly for many years.
Yeah, it's a great team. I think I told you I heard you on the oil and gas podcast.
Yeah.
Good podcast. Surprisingly good podcast.
Yeah, they need to rename it because it's really energy. Everybody in oil and gas is rebranding to energy.
Interesting. And yes, Tim, your former astronaut colleague, was on that one. But I was glad that I got Vaughn. I just got to say, I said, I don't want Tim. I want Vaughn on mine for sure. Great. Well, I've really been enjoying getting to know you guys. So on the personal side of things, so Vaughn, I had Norma Cadena on the podcast, and she said that she and Carmen, they're the 2 GPs. They're 2 of the GPs at Mila Capital. She said that they are 10% of all Latina general partners in the US. Is that crazy?
Yeah, it's pretty unfortunate, but it's not particularly. I'm not surprised, unfortunately.
I mean, I was going to ask you, like, how many Black GPs are there in LA? Like, it's got to be, I bet you know them all, is my guess.
Yeah, I mean, far be it for me to speak for anyone else. And I think the experience is many splendored for every Black VC, just like it is for every Black person in America. But, I think that it's definitely a problem that needs to be addressed. I think that diverse perspectives drive higher returns. So one of the things that I really appreciate about Blue Bear is that all of our backgrounds are remarkably different. So yeah, I mean, I've tried to do a lot from quietly investing in the funds of as an LP and the funds of diverse fund managers, as well as supporting on the angel side a fair amount of entrepreneurs. And that's the only way that I think the problem's going to change is having capital in those hands.
Absolutely 100%. Sometimes, I mean, I'm part of a lot of the women's networks, the female founder networks, and it's great to have mentorship, but actually capital makes a big difference. Yes, both. You got to have both.
Yeah, it's pretty important factor in this game.
Yeah,
absolutely. We're asked a lot about our ESG footing, and as investors in technologies that improve how the energy and as is now called climate tech businesses work. That's a central set of principles for us. We also believe the S and the G deserve just as much focus, and we try to have ESG and health and safety and diversity be the top agenda item in every single board meeting of all companies, and then we of course have to live that ourselves as an investor.
That's great. I really appreciate getting to know Blue Bear better, and I feel like I learned a lot today. So thank you guys for making the time.
Thank you.
Thanks a lot, Minnie.